Are you considering diving into real estate investing with the BRRRR method? Before you take the plunge, watch this video to uncover the scary truth about the BRRRR, buy, rehab, rent, refinance, repeat strategy. In this eye-opening discussion, we'll explore the potential pitfalls, hidden costs, and risks that many investors overlook. Discover the common misconceptions about BRRRR investing, real-life horror stories from seasoned investors, critical mistakes to avoid that could cost you thousands, how to assess if BRRRR is the right strategy for you. Don't let the allure of quick profits blind you to the realities of real estate investing. Equip yourself with the knowledge you need to make informed decisions. Join us as we peel back the layers and reveal what you need to know before jumping into the BRRRR method. Make sure to like, subscribe, and hit the notification bell for more insights on real estate investing and financial strategies. Today, I'm diving deep into the BRRRR real estate investing method to uncover the scary truths behind it. Can I handle what I find? BRRRR stands for buy, rehab, rent, refinance, repeat, and it has been a popular strategy among real estate investors. The potential upside of building passive income and scaling quickly is certainly appealing. But, while this method offers great potential, there are hidden challenges that every investor should be aware of before diving in. Unexpected costs and pitfalls. The BRRRR method may look straightforward, but many investors find themselves caught off guard by unexpected costs. For example, you buy a distressed property thinking it needs only cosmetic upgrades, but once you dig deeper, you find foundational or structural issues that require tens of thousands of dollars to repair. These unforeseen expenses can quickly eat into your profits. I've heard horror stories from investors who discovered mold, asbestos, or outdated wiring, things that weren't visible during the initial inspection. A seemingly great deal can turn into a money pit if you're not prepared for surprises during the rehab phase. Market risks. Another major risk of the BRRRR method is the real estate market itself. Property values can fluctuate, and you may find yourself in a situation where refinancing isn't as easy or profitable as expected. You might buy a property in a hot market, expecting it to appreciate in value, only for the market to cool down or crash before you can refinance. Imagine locking in a property at the peak of the market, and when you try to refinance, the appraised value falls short of what you anticipated. This limits your ability to pull out equity, leaving you with more debt than anticipated. Real estate is subject to boom and bust cycles, and it's important to account for this when pursuing BRRRR. Rehab delays and cost overruns. Even seasoned investors experience challenges during the rehab process. You may set aside a budget and timeline, but rarely do projects go perfectly as planned. Delays with contractors, permit issues, or supply chain disruptions can push your rehab over budget. Suddenly, you're sinking more money into the property than expected, with no guarantees of recouping those costs. For example, I know an investor who planned a 6-month renovation but ran into permit delays that pushed the project to 12 months. Meanwhile, property taxes and insurance continued piling up, increasing holding costs, and their anticipated returns shrunk. Tenant and rental market challenges. Renting out your property sounds easy, but it also comes with its own risks. Problem tenants who miss rent payments or damage your property can quickly turn a cash-flowing asset into a headache. Plus, periods of vacancy are more common than people realize. If your rental market isn't strong, or if the tenant pool is unreliable, you may find yourself paying the mortgage without rental income to cover the cost. Imagine planning for steady rental income but being hit with 2 months of vacancy. Or worse, a tenant who damages the property, leaving you with repair costs on top of lost rent. These are risks that every BRRRR investor should factor into their financial planning. Overleveraging and financial strain. One of the biggest risks in the BRRRR strategy is overleveraging. It's easy to get excited about the potential to scale quickly, but if you take on too much debt without adequate cash flow, it can lead to financial disaster. Many investors borrow aggressively to fund their next property, but if the market turns or they face unexpected costs, it can lead to a negative spiral. It's important to remember that each refinance adds debt to your portfolio. If your rental income or property value doesn't align with your debt obligations, you can find yourself stretched thin. This is particularly risky in a rising interest rate environment, where future refinance terms might not be as favorable. The real estate market bubble risk. Lastly, the risk of a real estate market bubble is very real. We've seen bubbles burst in the past, leaving investors with properties that are worth far less than their mortgages. Diversification is key, and you should never rely solely on continuous property appreciation to fuel your investment returns. Even if the BRRRR method has worked for you in the past, it's crucial to remain cautious and prepare for potential downturns. Many investors were caught off guard in past housing market crashes, ending up with negative equity or unable to sell. The BRRRR method is not inherently bad. When executed correctly, it can be a powerful tool for building wealth and creating passive income. However, the truth is that it comes with its own set of risks. You need to approach this strategy with your eyes wide open, carefully evaluate each property, and prepare for both the expected and unexpected. By being mindful of market fluctuations, accurately budgeting for repairs, and avoiding overleveraging, you can minimize risk and increase your chances of success. Remember, real estate investing is a long-term game, and patience is key. Thanks for watching. If you've used the BRRRR method or have a real estate investing story to share, drop it in the comments below. And if you're looking for more insights, be sure to check out my other video on real estate strategies for beginners. Don't forget to like and subscribe for more real estate tips.